Welcome to The Real Money Show. My name is Jeremy Wiseman. I'm joined with Jerry Correia. The phone number 1-877-8-SILVER. The website guildhallwealth.com. And what a show we have for you today. We have Steve St. Angelo from the SRS Rocco Report. That's going to be an amazing interview coming up in just a few moments. And later on in the show, we're going to talk about misinformation, inflation, and that blistering hot CPI numbers that came out. We might get into a little crypto, and of course we're going to talk about all things precious metals, gold and silver, and where things are headed and where we are in the market. But first, let's get to that interview.
Independent researcher Steve St. Angelo of SRSRocco.com started to invest in precious metals in 2002. Later on in 2008, he began researching areas of the gold and silver market that, curiously, the majority of the precious metal analyst community have left unexplored. These areas include how energy and the falling EROI, energy return on investment, stand to impact the mining industry, precious metals, paper assets, and the overall economy. Steve considers studying the impacts of EROI one of the most important aspects of his energy research. For the past several years, he has written scholarly articles in some of the top precious metals and financial websites, and we are very pleased to have him back on the show.
Let's get right into precious metals, because there was some sort of misreporting that was happening a couple months ago with regard to the World Gold Council and LBMA. They were overstating their holdings by about 3,300 tons. Can you tell our listeners about what that whole thing happened and what that was?
Well, the LBMA is there's a lot of the silver that's held on ETFs. A lot of it is held in London. Sprott's actually in Canada, as you know, but a lot of it's held in London, and most of the SLV, which is actually headquartered in the U.S., is held in London by JP Morgan. And so what happened was there was that short squeeze, and we had a big increase in the ETFs during late January, early February. A lot of demand for the global ETFs. So JP Morgan added 110 million ounces of silver just in 3 days. So we saw a lot of ETFs adding silver. And what happened was in the next month, in March, it seemed as if LBMA came up with a 3,300 overage. And they said it was a mistake, and it should have been, and that's a 106 million ounce mistake. I mean, that's almost 10% mistake. That's a pretty big mistake. So I think that's the issue. But the bigger problem is back in 2019, the LBMA's total inventories, only a third were for ETFs. Today, it's 2/3. See, that's the big problem now, because as more and more investors move into ETFs, we're talking retail stock traders, they move into the silver ETFs, they're going to have to get more silver. And we know already JP Morgan has said in their prospectus, and even the Aberdeen silver ETF changed their prospectus, that they may not be able to get the silver. So to me, that's the more important issue.
So where are they going to pull the silver out? Are they going to go back to more paper, do some naked shorting? What are the options? What do you think the options are for the LBMA?
Well, JP Morgan, and I've looked at several of these ETFs will actually publish their silver bar list. And we know that there's approximately 1.1 billion, about 1.15 billion ounces of silver. And they maybe get a little bit more. Now, if JP Morgan, they produce this silver bar list, now all of a sudden a lot of investors start moving into ETFs and even the iShares. I'm glad if investors move into the iShares, because that's going to be very disruptive to the market, which is going to cost JP Morgan to scramble for silver. If you start seeing their silver bar list putting down a lot more bars, then they can actually access, that's going to be a red flag. So by publishing a public bar list, JP Morgan has set themselves up for a problem if they can't access the silver. And again, they have said that. So I think the issue is that we're going to start seeing silver behave like palladium, not because of industrial demand. That's going to be a factor too, but more investment demand as these ETFs, as well as physical investors, try to access the physical silver. And I think we're going to see fireworks here in the next several months or year.
And if that event were to occur and we have those sort of shortages and the market is taking off, I know in the past you've talked about silver easily being valued at $100. Do you think it could be moving higher than that? Where would you see a fair value where people would say, okay, I can start letting go of some silver at this point?
You see, that's a tough question because we're heading into a paradigm from building wealth, which we've been doing for centuries and centuries, to protecting it, and that's due to the energy. So to give you a number, that's tough because I think silver just gets stronger and stronger. We could see spikes. I mean, look at palladium, still in the 25, it's up 5 times than what it was. So for silver to be up 5 times, we're talking 100, 125, but I think it's going to be even higher than that because there's just not that much silver. All the assets in the world, about 470 trillion. That's what it is. And that was a few years ago. They haven't updated the information. And global gold and silver investment is about 4 trillion. So if you just get more people moving into gold and silver, especially silver, the price could be very crazy because we've never been here before. And so I think that's the issue. Yes, we could see 3-digit silver.
Let's talk a little bit about energy return on investment, because this is something that backs your core philosophy. It's the basis of your research, and it's for you, it's incredibly important to where ultimately the prices of not just precious metals, but all commodities are headed. Can you tell us a little bit about why energy return on investment is so important? I mean, you just touched on it just prior.
Well, you see, energy return on investment is the simple equation that allows single cell organisms, plants, animals, humans, small businesses, corporations, countries, and empires to survive or perish, all of them. And so when you have a positive energy return on investment, and it can't just be a little bit, it has to be enough to sustain the whole system. When you don't have enough, that's when you start adding a lot of debt, which is what we're doing now. Or if you're the ancient Roman Empire, you debase your currency, the silver denarius. And so this is the falling energy return on investment of energy causing havoc in the financial system. And so when you see a lot of debt being added, that means the world is moving faster and faster just to stay from falling. And when the oil production really starts to decline, we hit this energy cliff, then it becomes impossible for central banks to print money to offset this. And that's the falling energy return on investment. And the problem is the biggest assets that most people own are stocks, bonds, and real estate. Those are energy IOUs because you have to burn more energy next year to give those value or to keep those from losing value. The gold and silver, physical owned gold and silver are not energy IOUs. They are stores of this energy value. And so that's the biggest difference that most precious metal investors don't understand. That's the key reason actually to own the metals.
So in terms of energy, I find people can really see it now because obviously oil prices are rising. Do you think that there's a trend where people are recognizing what you're talking about in this sense of just the connection of energy to everything and how it backs things and creating debts, et cetera?
I think some people are, but when you look at the new high-tech financial guys talking about Bitcoin being the new future, this new exponential age, some of these guys are talking about, and Elon Musk is going to send us up in space, and we're going to do all these wonderful, we're going to have flying cars, and we're going to be in cars that can drive themselves. You see, that takes a massive amount of energy. And look what's happening now. We're having shortages of semiconductors. Everything's computers. Everything is semiconductors. And now what's interesting, the automobile dealers the automobile manufacturers are starting to cut certain technology in their cars, in their trucks, so they can produce them because they can't get the chips. So I think this is the issue that we really don't understand. And unfortunately, a lot of people, I call it the energy tooth fairy. They just think this energy is going to continue to run all this high technology. And unfortunately, the more high tech you get, the more energy you need. So when energy becomes problematic, all of that gets into trouble And I think we're going to get into trouble quickly, which is another reason why cryptos, fiat currency, treasuries are going to be in very, very big trouble. But the precious metals are going to be the go-to store of value in the future.
So in other words, I'm just thinking about this, the fact that, you have all of this digital, all of this technology. People seem to be, what you're saying is people are ignoring what this actually costs in the real world. I know, Elon Musk was saying, oh, we didn't accept crypto because we didn't accept Bitcoin because, the environment impact, et cetera, in other words, the cost to actually get all this off the ground. So you're saying that people are just ignoring the real world while they continue this delusion into technologies and whatnot, but obviously they have to coexist, right? So there's going to be, you talk about this in one of your articles about how much silver is going to be used up in electric cars and whatnot. So where's the balance there, in your opinion?
Well, I think, you see, I can tell you that the energy data shows it. And Shell announced 2 months ago that they've hit peak oil, and they've got about 9 years worth of reserves left. And ExxonMobil, which is another large oil company, they just wrote off a third of their oil. So when you start seeing the major oil companies make these statements and produce this information, we're not talking about small companies. These are the majors. So that's how bad things are going to get within the next 5 or 10 years. And yes, I think everybody is focused. It's the just-in-time system, right? I call it, we live in a Star Trek replicator economy. You go on your computer, you order something from Amazon, 2 days later, it's on your front door. That's like a Star Trek replicator. But there's a massive supply chain that makes that possible that people just don't even consider. And it takes a lot of energy to run that. And now we're starting to see problems everywhere, like the problem we're seeing that they hacked the gasoline pipeline. These are just more issues that are more monkey wrenches that are going to disrupt this very complex, high-tech global supply chain.
And that's going to keep on going because, if you're saying peak oil's in 9 years, obviously prices are going to rise. We'll be able to keep going with fossil fuels for another, let's say, another 10 years after that, who knows? And then you'll have no choice but to move over to something new. And are we ready to really move that over? I know in the past you've talked about the fact that these green energies are great, but we're not quite there yet in terms of the structure and how everything it takes to make that run, like solar power, et cetera.
Good question. I think the issue is, my stance is green energy won't solve the energy problem. Actually, it makes it worse. And that's a conversation on itself. But we're going to spend a lot of silver and metals trying to make that work. So that's going to happen. The issue is even some top forecasters, top consulting companies are saying that we're going to hit peak oil in a few years. We're going to hit it in a few years. And actually, it's not going to be 10, 20 years away. I think by 5, 10 years, we're going to start going over, I call it the energy cliff. So it's time to kind of prepare now. Even higher oil prices aren't going to work, just like high coal prices didn't stop peak coal in Germany during World War II and in the UK in World War I. They still peaked. Higher prices aren't going to work because that's the falling energy return on investment. Workers are not going to be able to afford higher oil prices.
So in some ways, when we're talking about precious metals, specifically silver in this case, we kind of have two tracks here. You've got people looking to protect their wealth against, obviously money printing and all of these factors, which have led back to energy, but also this changeover from fossil fuels to green energy down the road. You have sort of two tracks there. You've got one, just protecting wealth, and two, the commodity side of the real world of things, the real world of digital, et cetera, that is going to continue to push the market up higher no matter what anyway. So you kind of have two reasons to be involved in the market, yes?
Yes, I agree. Exactly. And I'm going to put out a video. There's going to be 4 factors that are going to do this. But there's 2 ways to value silver. And what the way that's being valued now is a commodity. and that's the cost of production and supply and demand. The other, which there's only really two, is gold and silver are money. So they're valued differently than a commodity because a lot of it is saved and invested. So you have to value it differently, and you value it based on the energy, which we're not doing that presently. We're still valuing gold and silver as commodities because there's a lot more investment demand. It pulls the price above its cost of production more. And that's going to get, you see, that's the thing, the key. It's going to impact gold and silver, both, but silver is going to be impacted more. Why? 50% of silver demand is industrial. It's less than 10% for gold. So because silver's been an industrial metal, that's why a lot of analysts say, well, silver's just an industrial metal. It's not really going anywhere. No, it is. And that's because we had 331 million ounces of silver ETF demand, the highest ever. That's what caused a lot of problems last year. So the thing is, we're going to have that demand pulling the industrial demand pulling as well as the investment demand. So the price of silver is going to go up much higher than what it costs to produce it. And the problem is in the future, even though the price will go up, we'll bring on more mines. We won't have the energy to produce that silver. And so people don't really understand that either. So that's another factor to be long-term bullish in silver and gold.
Wow, just thinking about what you're just saying, I was thinking about Nixon, that people who own precious metals are going to be vilified in 10 years because they're going to be called the manipulators. Oh, you're holding all this silver and we can't produce all of these things. We can't produce TVs and cell phones because of all these silver manipulators. Wouldn't that be an interesting irony to happen down the road? Steve, I want to just quickly return to what we were discussing regarding the World Silver Survey and this idea of that there was a surplus of silver over the last few months or back in March. Can you get back to that and why it was so important?
Kitco did an interview with Philip Newman. He's the chairman of the Metals Focus, which is the leading consultancy that does the analysis for the World Gold Council and the Silver Institute. Now, what's interesting, they said there was an 80 million ounce surplus, and even the interviewer was scratching his head. He goes, a surplus. And so a lot of people didn't understand with all this demand last year, how could there be a surplus? Well, what they do, the World Gold Council includes ETF demand in their supply demand equation, their surplus deficit. They add it in. The World Silver Survey does not. So according to their data, it was an 80 million ounce surplus. But if you add the 331 million ounces of ETF demand, it was a $250 million, 251 million deficit. And then there was a deficit last year of 60 million due to ETF demand. So in just those 2 years, there was over 300 million ounce deficit. Now the World Gold Council for the last 2 years had a 42 million ounce surplus. So again, there was actually a deficit last year because of this huge increase in the silver ETFs, which caused a lot of problems for JP Morgan and the other ETFs. And I think if we get much more demand for the ETFs this year and going forward, we're going to start to see a lot of problems with these ETFs trying to get silver.
Are they going to change the way they do these surveys? In other words, are they already adjusting on how they quantify these metrics?
Well, according to Philip Newman, this is the way they do the gold and silver analysis. He told me that the World Gold Council likes to put the ETF demand in total demand, and the Silver Institute adds it after the fact. And so I think the issue is they're trying to say that, let's say, bar and coin demand is from new supply. But gosh, we're getting a lot of recycling. It's like almost 200 million ounces. So if it was so bad that JP Morgan said that we might not be able to access the silver, then that's just a red flag to me that says that this should be included in the real annual surplus deficit. So I don't know if they're going to change it. He told me they won't, but I think in time they're going to have to, because the ETF demand is going to be so strong. It's going to impact the overall market.
It's going to look like, double speak, where the silver Wall Street bets people are going to say, let's get another surplus going, because surpluses mean deficits.
Yeah. And, there's this above ground stock of gold and silver. We know that. It's different than copper. There's no one really invests in copper. It's for industry. But so they look at that as a moving figure. But the problem is there's just not enough silver as there used to be. And nobody really considered having, it was 1/3 of a billion ounces of silver ETF demand. You get another year like that. And I did the analysis. Just physical and ETF demand was 70% of global mine supply. It's never been that high. And you can't have that many years like that, or you start looking, the situation in the silver market starts looking like palladium.
That just got me thinking about, like, even if we don't have the same year that we had in 2020, there's still going to be an uptick in the metals market. We're still feeling it at our firm. And it's like, even if it went back down to 20-30% of the 70% increase, you're still looking at a major problem in the market within a couple of years. That's if we don't have another catastrophe or panic into the market, right?
We're seeing these crazy real estate prices and real estate market. That's not sustainable. The lumber price being $1,600, that's not sustainable. So when that kind of crashes and the real estate market crashes, you get these people start waking up, moving into silver and gold, ETFs. Because the market is just going to get worse and worse in time, and so I think we have no idea what kind of demand that's going to be. It really is, because people are getting into Bitcoin and Ethereum and all these things because the price is moving up. That's it. Yeah. What happens if silver starts moving up, but the reason to own it is even more important, like owning toilet paper during the pandemic? That hasn't hit the mentality yet. A lot of people in our age bracket don't get it, but wait till they start getting it. I really think we're going to see a lot more ETF demand. And even though the Wall Street silver people are pushing against iShares, I welcome it. I look at it as a general hiring mercenaries. Yeah, the mercenaries don't give a crap but they're getting their money.
Yeah.
Well, you get these naive stock traders moving into the ETF. They're going to cause so much stress for JP Morgan. That I welcome it. I welcome physical demand, all ETF demand, institutional demand, and industrial demand. And we're just beginning to see those four.
Just looking at your website, it looks like you've gone to a membership. And I'd love you to share this with the audience, because there's some big benefits to how you've changed the structure of what you're presenting and your research, because this is all research based, and you're really starting to present a lot of information. And also, even just talking to you, it sounds like you're even more jazzed about your own research than ever. It sounds like that's part because you have more time to do it. Is that right?
Jeremy, yes, thank you. And I will say what you said before. If the silver investors are like Nixon, they're the manipulators and they hold the silver. Well, guess what? If worst come to worst and they decide to take people's silver, they're going to give you market value for it. At the worst comes to worst, they're going to give you market value, and the market value is probably going to be a lot higher. So I just wanted to say that. But yes, we went to a subscription service. We still have free articles, but we put a lot of time and effort into the silver and gold member articles, posts, and videos, because there's a lot of data that I did this late Bronze Age collapse and how it's paralleling what's happening now with our modern high-tech global supply chain. And I see similarities. It took me a month to do the research and put that video together. So that's the kind of information we put out. We talk about the precious metals. We put out data that you really can't find anywhere else. So we have the silver gold members. And I believe if people really understand the energy, they will not want to sell their metals unless they need to purchase something. You're not going to sell metal to get fiat profits. You'll sell your metal either for gold or silver for gold or gold for silver. You can do that for the ratio if you want to do that, or for something that you really need in the future. You don't want to sell your metals because it's spiked and you're going to get fiat profits. That's one thing I believe is very important for your listeners to understand.
Definitely. Thank you so much. Steve, how would people get in touch with you and learn more about some of the research that you're providing?
You could go to the srsrockreport.com website. And also we put out 1 or 2 public videos at the SRS Rock Report YouTube channel. And I really do appreciate being here today.
Welcome back to The Real Money Show, the number 18778-SILVER and the website guildhallwealth.com. This is Jeremy Wiseman, joined by Jerry Correia. That was one hell of an interview, wasn't it, Jerry?
Such a fantastic interview, so exciting with all of the data that Steve, every single day coming out with tremendous information that we need to really focus on. A lot of the stuff that is often overlooked. Just a great interview.
You know, I didn't quite know whether or not to be excited or terrified by the things that he was talking about, just in terms of the effect of energy on the world. We're at peak oil. It's going to be ending. That people don't understand how much energy they're using when it takes. I mean, you can start to think about it. You know, I liked when he was talking about, you know, just logging on, deciding to buy something online, and it just magically appears, as though it just magically appears, not thinking about the logistics involved and the energy involved in that. And you start to wonder, what, you know, is it the convenience worth the community, right? And I wonder as well if, in lieu of the pandemic or whatnot, if communities will start to get closer, if people will be more interested in saying, I'd like to buy something locally if I can and support the local shop or whatever, you know, whatever it is, whether it's local goods, things like that. What are your thoughts on that?
I don't know. It would be an amazing thought, and sure brings you know, a lot of hope that we can get to that point. But as we see with the way, I guess, the psychology around investors and traders today, even people who are buying properties, it's not like that. It's really about me and what can I do today, and how quickly can I flip and make a profit for fiat, not really thinking of the long term or even medium term, Jeremy, but it's really kind of focused on what can I grab now.
Yeah, and when he was talking about real estate, I'm not sure if that was on air or off air, actually. He was just talking about, you know, that people aren't selling their first homes. He was talking to us about, you know, that they're moving directly onto their investment property. I think that a lot of the problem is that because housing prices have moved up so quickly, specifically in Canada, that people who own first homes can't move up. And so they're staying in their first home and trying to make do with the first home, and it's not allowing the next person to come in, right? And that's where the problem is lying. We did put an article out on our newsletter last week for those who are subscribed from Better Dwelling. Not sure if you saw the chart where it showed how the incomes are not rising in Canada as fast as the real estate. That's a problem.
That is a problem. We touched upon that point last week when we discussed, you know, everything moving up into bubble territory, sizzling and frothing over. We're seeing bubbles everywhere, minus we're not seeing a bubble in precious metals yet, and neither we're seeing any uptick in wages. So everything's moving up in price, but the middle class is getting squeezed with low wages. And how can small business compete with government handouts giving people free money to stay home? So it's we have yet to see the small business decide, I'm going to try to compete for my worker and raise the wages and give them more per hour.
It's an incredible situation what we're seeing, and just again, this idea of real estate being, you know, this asset inflation as being a source of prosperity it's just again misallocation of investment funds or malinvestment in a way where things are just not. The valuations on things are just not right, and where money goes as a result. And I think I know people are really seeing it. They're really talking about it. The conversations I'm having with people outside of work these days are much different than they were several years ago. People are seeing the inflation now. They're seeing the effects of it, and they're asking questions about it and how it works. I'm looking back and thinking about all of the analysts in the gold market. Do you remember when they were all talking about, once quantitative easing hit, you heard the term quantitative easing to infinity? Mm-hmm. It was like, they're not going to stop at 1. They're not going to stop at 2. It's going to be QE to infinity. We just didn't know what was going to be the cause of it. And
right.
now it was the pandemic. It was, now we're going to get a chance to ignore every problem that we had prior to this. We're just going to wipe the board clean and blow this sucker up.
Pedal to the metal.
Pedal to the metal. And you start to think and you go, yeah, hyperinflation, hyper deflation, whatever it is, how are you going to protect your wealth? It is a scary thought that, this idea Roadrunner just ran off the cliff and no one wants to look down and think, what is this going to look like in a couple of years?
Mm-hmm. Yeah, no one's thinking about what this exactly will look like. What are the repercussions? But we know what the repercussions are. It's going to be on the back of our future generations. No one's going there again. We're not thinking beyond ourselves, unfortunately, but we have to for this civilization at least.
And that's why I thought it was so important what Steve mentioned earlier about this idea of the world moving towards protection of wealth as opposed to the growth on wealth. And that's something we hear every day. People say, look, I want to get into metals not because I'm looking to make a fortune. I want to put my money into metals because I want to protect what I've made. Mm-hmm. And I think that's very important, although I do believe that there's opportunity because both precious metals are undervalued. Let's keep going with this, Jerry. The phone number 18778-SILVER, the website guildhallwealth.com if you want to get involved in the physical precious metal market, whether it's acquiring some physical precious metals direct, maybe holding it directly in your registered account like an RSP or a TFSA. You give us a call, go to the website, we'll show you how it's all done. Welcome back to The Real Money Show. This is Jeremy Wiseman. I'm joined with Jerry Correia. The phone number 18778-SILVER, the website guildhallwealth.com. Jerry, blistering hot CPI. What does this all mean?
So this Wednesday just passed, the CPI data came out of the United States. The expectations was 3.6%, and this is regarding inflation in the U.S. And we have to remember that the U.S. Treasury Secretary mentioned that the inflation is going to be transitory, that we have nothing to worry about. However, the CPI data that came out at a blistering hot 4.2, sending shockwaves through the market. U.S. Treasuries were dumped, yields spiked. The 10-year Treasury literally touched 1.7% all the way from when it plummeted 1.47 last week after the poor employment data. But what this is showing to us, transitory myth. This is not transitory at all. Prices are moving up, and as a result, and the yield has started to spike. What's interesting, though, yes, the 10-year Treasury did spike, and normally what happens is it's an algorithm that says to sell gold. This happened last August when gold peaked at 2,070-ish. The yield was around 0.5, and then the yields start to spike back up, hitting 1.7, where we're pretty much at today. And where was gold back then? Gold hit in March of last year 1686. Well, guess what? Today we're at 1.7. Gold is strong, above 1800. Gold is not budging. Gold is seeing right through this. Inflation is here, but people are not believing the data that's coming out.
So in some ways, on the one hand, you're saying higher lows, which is always good for a market. Mm-hmm. The other aspect might be just some of the geopolitical stuff that's going on. Whether it's pipelines being shut down, the prospect of pipelines being shut down, geopolitical unrest. The Middle East it seems to be hot right now. It seems to be a lot happening there, and we hope it can be resolved quickly and get back to a place of peace. But the fact is it's no longer a peaceful place, and that was very brief when it was. So maybe part of the geopolitical issues, again, oil prices are moving up regardless. So maybe that's also giving us a bit of a floor under the gold market as well. What do you think?
Yeah, for sure. Especially when we see the Fed and even the talking heads in the media denying that inflation exists, when we know that inflation is really there to hide inflation, not including food, energy, and now housing, not including house prices, which went up 18%. We're hearing Fed officials saying that this is transitory, and denying. Actually, yesterday there was an article out of the Dow Jones Market Watch that we don't need to worry about this CPI report. This is all about the base effects, and that the market's just recovering from being flattened last year. So it's just a recovery, and trying to dismiss that this is just really a gimmick. This base effect, when they're saying, well, the market should really be not focusing on inflation, but we should be focusing on tapering the balance sheet.
Oh my gosh.
Well, the market's going to tantrum regardless. You're going to have a taper tantrum, and we're having an inflationary tantrum. Either way, the stock market is going to have a tantrum and a hissy fit regardless if you try to taper or face inflation dead on.
I love that. Which tantrum do you want? The inflation tantrum or the taper tantrum?
And that was the Dow Jones
and we
Market Watch.
We know that they couldn't. The Fed tried to taper once before, back in 2019, and failed miserably. What's it going to look like now, trying to taper? And where are they going to taper to? I mean, they could barely taper when their balance sheet was at $4 trillion. Now it's edging towards $8 trillion. What are you going to taper to?
No, you can't.
You think you're going to get back down to 6? You think you're going to get back down to 5 before something major happens? We're starting to see just absolute craziness happen, and I feel like gold and silver just provide a little bit of stability in all of this craziness. I mean, I had a friend just before we jumped on. I was having a quick call, and he said, we're one SNL skit away from having 30% of your portfolio destroyed. I mean, it can happen that quick. I mean, people are putting their money into memes.
Yes.
I mean, that just shows you how ridiculous it's gotten, that how far away from value we've gotten. And I find people who are getting involved in precious metals today are sharing that sentiment exactly. They're saying, where can I put my money where I can protect my wealth, where there's some sanity involved, and where there's actually something that I can pinpoint that's actually undervalued. And so I look at the entrance point to precious metals right now, and I say, wait a minute, it's undervalued. Relatively, I think so, and you're looking at a low risk entry point into the market.
Right.
The supply demand fundamentals are all set up in terms of strong demand. The supply is limited. I mean, we heard all about that with Steve St. Angelo today. So I think this is the perfect point. Why are you spending time trying to figure out if something that's overvalued is going to continue to move up, when you could be looking at something that is undervalued and has a lot of room to grow and basically very, very little downside at this point?
That's right. This is your wealth insurance. Now, precious metals are real money. Never before in our generation has that been more important. Yes, we want to have gains, and this is what precious metals will provide to you. We have tremendous topside potential, especially with the data coming out from SRS Rocco and others. Everyone's seeing that topside potential, but it's really about safeguarding your wealth for future generations.
If you want to learn more, contact us at 18778-SILVER, the website guildhallwealth.com. I want to thank everyone for listening this week, taking the time, and also Steve St. Angelo for joining us on The Real Money Show. And you've been listening on Global News Radio, 640 Toronto.